Hey, it's Mac with PriceActionTradingSystem.com, and it is Thursday. It's February 28th, and this will be our chart lesson for the day. It's Thursday, so this is going to wrap it up for the week. No chart lessons on Fridays. We basically had a range day today. If you move over here to the left a little bit, you can see the overnight highs were up here, overnight lows were down here. People often ask me, why didn't you put your support up, your resistance line up here and your support line down here? Well, you put your line where you get the most touches. You can see most of the touches that turned down were right across here. Most of the touches that turned up were right across here. So this kind of gave you your consistent line here until we had a little bit drop below. And you'll often get some action above and below and some failures and things like that. And just like we did right here, notice we failed below here, but we still got back in the range. And we're back inside it now into the overnight trading. So that's why I put the lines where I put them. You put them where you get the most touches, but I usually like to find the most touches using closes as well. And notice you get a few more closes here. Uh, but that's where you consistently get most of your touches across the bottom. And up here you get most of your touches across the highs. Earlier I had it a little bit lower here because once it moved up, I adjusted a little bit, and that actually made the midline make more sense. You can see the midline right across here. Prices working both sides, acting as resistance, then acting as support, acting as resistance, and that's what you want to see, and that helps you to figure out if you're in the right place or not. And you can just see that's a perfect equal distance as well. So that's why I got that line on there. So that's your midline. Um, so let's back out a little bit and talk about the trades. The 7 o'clock hour came right in this little pullback here, and this is really tempting, but that's just not a very bullish bar. Then it takes back, it pulls back, gives you a lower high here, but again, it's a first entry, and it's really not your signal bar. Your signal bar is down here. You didn't break lower, so this is a little iffy trying to go long right into that. That's basically looks like a double top, and even though it would have worked here, it turns down quickly, and you've got a little channel working down here. And you actually get a second entry long right here. And this is a fairly bullish bar, but notice how we push through that EMA and how this little channel is playing out really nicely. I mean, look how it's holding prices real nicely. So I would at least wait for a higher low, which doesn't come till here, and that's not a very good signal bar. There's just as much stem as there is green on this one. And you got a lot of sideways going on now, but when it tries to go higher again and fails, you would expect this to maybe try to make a new low. And as long as you got enough room there, you may take that trade. This trade works out. You could argue for this to be, I mean, it's real close to being green, but with that trap there, I'd probably take it. And then at this point, you don't have a whole lot of, I mean, that's what you'd be looking at on the far right-hand side. So it's not looking a whole lot like a range just yet, even though we are trading in the middle of the overnight highs and lows. So that's your first clue, but you don't have a whole lot of evidence. The only thing really about going short right there is you do have some support right across here. So that's a little iffy. Based on that, you could even argue for that to be green. I originally made it red. I liked that trade this morning, but just because it's a trap. And if it wasn't a trap, I'd say no way you'd go short right there. But when you tried to go higher once, twice, three times, and you're making lower swings each time, well, we're probably going lower, especially with that being a new low, first entry, second entry. So that's a second entry short too. And of course we end up bouncing down here, but you get enough to get out. But notice exactly what happened. That's what you're afraid of to begin with. It bounces right there. And you don't want to get a good entry right here, even though there's a second entry long right here as well. I'd wait for a higher low, which comes right here, and you still expect you might retest this high. You do get a close outside. It's here before we make a new high, but I don't know if that's a convincing close. And some of you may ask how I got the trend line like this. Why didn't I draw it off my low? And if I did, it fits more over here. What I did was I got this line off these highs, and you can see it fits real nicely, and it just doesn't fit good right there. But if you move it over, it fits perfectly right there, and it does give you this one. It's a possible close. So you may have a trend, but this trend plays out as well, and then you start higher again. But I'd want a higher low here, which doesn't come to here, and that's a nice bullish bar too. And that would give you enough room to get out before you get back to here. Turns out to be a nice trade. And then we turn down right here. And you get a lower high here and a failed second entry long. Normally I'd like to see that push on through the EMA, but 3 times to go higher right there in that big bearish bar, I'm probably going to take that. And you can see that some people just weren't convinced yet, but when it tries to go higher yet again and fails and gives you another big bearish bar, you got to get in there. And at that point, your lows would have been down here, not necessarily a midline here yet. We still don't really have your range set up just yet. So there's a lower high here, but at that point, there's a lot of support right across here. So I'm not going to take that trade. That looks a little congestive anyway. Would have worked, but you'd be chasing a trade and taking a chance. And, our rules say we don't want to enter there, and we don't. And so we work on down. We finally get a close outside here, a little bounce. You're still looking for a chance to go short. You might go short on that second entry, but we just bounced here, and that's the first time we've bounced there. So you would still be looking at this as your support at this point. So you may look at this short. It's just not a very good setup on mine, although there is an inside bar that's even more bearish. It's a second entry. This one's is one of those that it's a possibility. You could mark it green. It's not a great setup. If you went short right there, what you'd have to do is put your stop above this bar. It doesn't matter because you're still going short at the same place, but this is where you stop. This is really your signal bar. Your signal bar is always the highest bar in your swing or the lowest bar in your swing. And then when it closes, you put your buy stop above it or your sell stop below it by 1 tick. And that's how you enter all your trades. So people get confused and they're trying to call the next bar over here your signal bar. Your signal bar is the highest swing or highest. It's the highest bar in the swing high, and it's the lowest bar in the swing low. Here, here, here. Those are your signal bars to the upside. Here, 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 here. Those are your swing highs. I mean, they may not be good trades. Don't take the wrong idea there. I'm just showing you where the signal bars would be if those were good setups. So you may take this one. This one would have been great to try to get in. You bounced here once. It's really only one bounce. It's not a good signal bar though. Turns out to be a big move. But watch what happens. You come back down, you pull back. Not a good enough signal bar there. But then you get your failure. Big bearish bar, and you got plenty of room. It's a quick, easy move, and then it bounces here. Now you got a double test. You made this low, you tested it once, you tested it twice, you got an overshoot here. You're a good bit away from the EMA. Generally, you want to wait on a higher low, but sometimes you will catch a major low, and you would have here. It would have come back and got your break evens on your runners here, unfortunately. But sometimes it takes on off like this, and you catch a major low of the day. And unfortunately, you didn't get that here. But you still may want to take that chance. Still would have been a good trade with several, a couple of points there, several points. But we end up coming up, and this comes back and tries to make a new low. We bounce there again, but not a good signal bar. If you had a good signal bar here, you could have taken this trade. It's a higher low. It's just a dead doji on mine. Then you get another attempt to go lower that fails, and but again, the signal bar is not very good. You could argue that this is a failed second entry short because look at that low, first entry, second entry. But I don't think you're going to fool a lot of people here. And you notice we didn't. It tried to go higher, and then it bounces again. And so I don't think you want to enter either one of those. You just have, and this is another one. You just have to watch. And it's hard to watch those go, but you did the right thing. If there's not a good setup, we don't take it. And we wait, and sometimes you'll miss a good trade, but the worst thing to do is chase it or beat yourself up because you didn't take it, and because next time it'll fail, and you'll say, and that's the reason we don't go long there without a good setup. So, but anyway, we're pushing up. first entry short, and then a little second entry short that fails real quickly and turns and goes out the other side. The highs at that point were still here, so you got plenty of room to get out. And guess what? It goes right up to those highs, and it looks like it's going to turn down, and then it bounces again and goes and tests this high. And that's as high as we can get for the day. You can see that right there. That's the same thing as down here. You could argue for that to be green if you want to be aggressive, because you may catch an important high of the day. And you actually do. Unfortunately, you don't get a runner. You get another nice move. That's 3 or 4 points back down to here. But it bounces and it comes back and gets the break even stops. There's a failed, you could treat this like a failed second entry long in a lower high. So you might even enter there. Again, I'll make it green, but I'd rather see a full blown reversal, to be honest, or at least a good signal bar. But notice this is a double top and another new high, and it's a first entry, second entry, and it fails. And then you get a nice signal bar, and you also have pushed through the EMA now. And this actually breaks higher, turns and goes out the other side. That's a good place to go short. And drops down, comes back, tests that trend line again. Another big bearish bar on a second entry. Notice that low, first entry, second entry, go short. Drops down, first entry, second entry, and you got a couple of matching highs, but this would really be your signal bar. That's a big signal bar. But if you got enough room to get out here, take it, because it could bounce at the midline, but it doesn't. It just shoots right on through, and then that takes you into the 2 o'clock hour. So there's a little bounce here, but you don't want to be going long. You figure he's pulling back to test the midline. We pushed through there, and remember, prices almost always come back and retest those important areas. And look how many times it tested it. And then it finally breaks through only to fail and probably trap a lot of people on the long side, and then the bottom falls out of it. So not the best trading day, not a bad trading day. Just remember that on range days, the best trades is to try to get short off these highs and to get long off these lows. In the middles where you got to be real careful, and notice I got only a few trades. It really wasn't obvious we were in a trading range here. By now it was fairly obvious. But if you are going to take one, what you want to do is see it push through, and now this act as support. And if you're going short right in here, it needs to be acting as resistance like it is right in here. Okay, had a slight interruption there. We were just talking about how to play a range. And this was pretty consistent across here. And if you had some good setups in here on your chart, you can take them. That's the thing about it. Sometimes my chart will look a little different than yours, and you may have had a better setup than I had. If you had a high or low here with a bullish bar, or especially right here after a double test, I'd take that every time. But they don't look very good on my chart, so I'm going to skip them. And even though it took off here, I'm not going to let it shake me up. I know that there'll be another trade, and you get one right here, you get a chance. Now, if you catch it down here, you're in a lot better shape because you could ride your runner all the way up. And that's why you like to try to catch something down here. But sometimes you get runners and sometimes you don't. And especially on range days, you don't get near as many runners. But this is a little bigger range. So you're looking at 2784 to 27. So it's a 10-point range. When you get stuck in one that's only 5 points, you know, you're not going to get, I wouldn't even be trying for runners. Here, if I could catch a low on a little failed break low or something, I'm probably going to try to catch a runner. In the middle, I may not even try for any runners. But the runners really change your math, and they really improve your trading. So they're important. But there's some days it's just not worth trying to get runners. It really is. And, you know, and when that is just based on knowing prices and experience. And, you know, you probably won't be able to spot that now. But at some point, you got to get to that. You got to get to that point where you see everything in the price action and you recognize all this. And it probably looks like a foreign language to some of you. It did me at one time too, but now I can glance at it and see it pretty quickly. But that's with 10 plus years, 10, 15 years of looking at it for several hours a day, and that makes a huge difference. and then doing a lot of study time afterwards. So keep that in mind. We've talked about all that. I'm not going to get off on that tangent today. But anyway, so-so trading day, and it's just a 10-point range, and that's going. If you don't get a lot of bounces consistently here with good setups, or a lot of turn downs consistently here with good setups, it's going to be a hard day. And so this was a little bit harder day because you don't get the consistent turn down. But you got several good setups here. You got a couple here. And really, you just didn't get a lot off the bottom, which is a shame because that's where a lot of times you get your best trades. But on your chart, it may be a little bit different. So, and if it was, by all means, and again, that's the thing with tick charts. No two are alike. Yours doesn't have to match up exactly like mine. It probably won't. Sometimes you'll get close, but just remember, it doesn't matter. There'll be a few trades that look better on my chart, and then some of the others will look better on your chart, but in the end, they offset, and in the end, you only want and need 2 or 3 trades a day. Don't go trying to, when you get ready to make more money, you don't take more trades. You still only take your 2 or 3 trades a day. You just start slowly increasing your leverage as you and that takes a while. So again, I don't want to get off on that tangent today, but just remember when you're increasing your leverage, you got to go slowly because when you start to pile on the contracts, the emotions start to ramp up and your emotions get in the way quickly. So you got to get accustomed to trading 1 or 2, and then you got to then you got to do that for a while, and then that'll slowly get comfortable. And then you'll maybe add 1 or 2, and you have to slowly build. It took me a long time to build up. And at some point, you'll have a point you can't get really higher without it really screwing up your trading. And you just, if it's not where you want to be, you have to keep working on it. But, at some point, it's not all about money. If you can if you can come in here and make $500 a day or $1,000 a day, you're going to make a good living. And eventually if you take that money, your extra money, and invest it, eventually you're going to get wealthy. But this is not a get-rich-quick scheme, so just keep that in mind. Anyway, I'm going to wrap it up. We'll be back to do it again Monday. I'm done for today. I'm done for this week. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.